and welcome to the MPE 2022 interview series. My name is David Parker and I'm the CEO of Polymath Consulting. And with me today, we have Alex Bloomfield, Payments and Industry Specialist at BT Group, and Hakan Eroglu, Global and Open Data and Open Banking Lead for Data Services at Mastercard. Both of you, welcome and thank you very much for taking the time out to join me today. Open banking obviously is exploding globally. Few can argue that. New fintechs are almost launching weekly. The UK is seen by many as a leader in this whole area. And as such, to me, it seems to make sense to ask you about the fact that here in the UK, we've seen the rollout of variable recurring payments on open banking, although many would say quite restricted in how it can actually be used initially. How important as a retailer do you see this development, given we already have direct debit? And obviously looking more widely, I'd be interested in both your views on how you see this type of functionality being rolled out, maybe even more widely in the UK, and of course in Europe and other markets globally. Alex, maybe I could kick off with you. Ladies first, of course.
Yeah, so I mean, look, we have existing payment functionality that's been around since forever, right? So DD works for the majority of the people, recurring card works for some, but as we sort of move into a more subscription style way of billing customers, the more flexible arrangements, we see that actually direct debit doesn't necessarily work for those customers. It doesn't work as a sort of a very easy switch on, switch off style service. SCA really makes MIT, which is your recurring card payments, quite challenging. There's additional costs around that as interchange starts to grow. So what do? We introduce something that is more flexible, that allows customers to have upper and lower limits, that really puts the control in favor of the customer as to how we're paying things, as to how we're claiming cash, and basically redressing, I guess, a balance where DD is wholly in favor of one and not the other, right? So I see a mass use case. We are, in an ever-growing digital space where we're introducing more subscription-style services with the ability to add on content. Now, the easiest way to protect customers from things like bill shock is to have the upper and lower limits and really manage a really cohesive customer experience and manage a really open conversation around that. So I'm really looking to push VRP into that space.
Okay.
Absolutely spot on what Alex said. I think it's from my perspective, it's to give consumers back the control over their subscriptions and the payment flows. And exactly as mentioned, the subscription models, the business models that are in place for those customers who are using video streaming services, music streaming services, and other kind of subscription-based services is to be in a position for the customer to have control, to see what's going on my account. Can I switch off different type of payments? For example, if I have canceled a subscription, for example. I think it's all about control on the client side, on the customer side. And for the retailer side, for example, it's an additional payment method, so to say, for the customer to choose. From our perspective, it's an additional payment method that consumers and retailers can choose whatever fits the best for them. I think something that I would like to mention as well is about security, about customer protection. There needs to be a framework in place in VRP to make sure that not only customers have control, but also fraudulent providers and others are not hijacking the account and making payments more than they should do, but also that consumers have a kind of control as well with different push notifications and different other measures to give them the understanding that it is not a kind of an open door that the consumer is opening the account to a random third party, but that there is control, there is security mechanisms in place, and that this method can really be successful in the open banking space. And I also see VRP as one component of multiple use cases in the wider open finance space. And UK has tapped into the new journey towards open finance, going away from open banking, the classic open banking, into open finance, opening up other asset classes as well, on pensions, on investments, on savings accounts, credit cards, and others, to give customers the choice to move money around to provide those customers the best service possible for them to reduce their costs and have more choice and more competition in the market.
But Hakan, do you, at the moment this is just the UK, do you see this rolling out across Europe or globally quite quickly, or is it going to be a slow process where the UK is like doing it for a long time without anyone else following?
I'm not really sure if it's going to be the VRP use case everywhere the same way, but I think there are variances and different models that are similar. And to VRP, request to pay is one, for example, where we are seeing those movements in Europe and also in other parts of the world as well. I mentioned open finance. Regulators and market players across the globe are watching what's happening in the UK, what's happening in Europe, in terms of what are the use cases that can be implemented in other regions. But definitely open banking, the linkage between open banking and payments is a quite natural one, is a clear one, because it started with open banking, access to payment accounts to enable new type of payment flows for consumers to choose what they want to use for paying goods. But I believe that VRP is a first step towards and more like a framework-based open finance world, where we are not only having atomic APIs as we had in the open banking world, where you have an API for account information, an API to initiate a payment, an API for something else, but it's more about to have a framework, to have a unified, standardized customer experience, so that every player in the market can implement those APIs in the same way in order to enable a unified, recognizable and understandable and safe and secure flow for the end consumers. And VRP is one example, sweeping as well as part of it. But there are plenty of more that is down the road in the roadmap as well in various markets.
And Alex, I'd just like to pick up on something you said about consumers, because obviously in the UK with direct debit, we have the direct debit guarantee, that really gives consumers confidence to take up and use direct debits. Do you see a need for some sort of VRP guarantee service, or how are we actually going to get consumers to feel secure and safe to take up this type of service?
And that is something that I speak about sort of often. Open banking is very much, there's no chargeback framework, there's no DDICA framework, there's no sort of recompense model, I guess, and protection model. I guess the argument is that it's CIT, right? It's customer initiated. But I'm also of the opinion that it does need to have some sort of balance in place and some sort of protection mechanism. How that works, I guess that's more of a regulator question, right? So probably above my pay grade. But I think there is definitely an argument to say, look, ultimately we are setting VRP in a certain way. It needs to have X and Y in terms of limits. Let's use a customer's bill as an example. They go on holiday. They've used more roaming than they anticipated, but they pay by VRP. They have an upper and a lower limit of, say, I don't know, £30 to £60. If that was a direct debit and their bill came in at £300, we would just take the bill, right? Because they've sort of had that much usage. But there is a DDICA framework which will allow them to recoup the money and work with us to do that. It's not really conversational direct debit, right? It's very much one in, one out, creates a flow through collections. Yeah. But actually, we're a telecommunications industry fundamentally, right? We're a digital telecommunications company. We should be able to have those conversations with our customers more readily, and using VRP sort of allows that. And we need to have that protection, I think, in place to support that. But I guess, how do we balance that against the whole cost-saving initiative? At what point do you go, you're creeping up towards MIT? Okay, granted, you're not invoking 3D, so there's a saving there. But actually, if you're the same price, what's the argument to use VRP in place of recurring or DD? So that's a regulator question, but yes, I think there does need to be some
great point to end on. Alex, Hakan, thank you very much for your time. It's been a really interesting session. Thank you very much for taking part in the MPE 2022 interview series. Thank you.